block prints and everything else. There's another example right there, isn't it? Look. See it? Exactly the same narrative as that previous trade. ICE orders. See it? ICE orders are exactly the same price as Voltic. That's suggesting that you're going to get a sell-off coming into that price area. And down she went like an absolute choo-choo train from that price print. It's just a lean again, isn't it? It's something that you can lean against as a narrative. There's an ICE order with that Voltic coming in behind the ICE order. So you can say, well, if everything else stacks up, I'm quite keen to maybe explore this as a possible bottom edge buy trade. And sure enough, price goes up. Doesn't go up very far, but it certainly doesn't go down. It gives you enough room to get a stop in at break even, right? Enough room to get a stop in at break even so that you don't lose any money. In other words, it's not telling you that you're going to make a profit, but what it's telling you is that your probability of losing money has just went down significantly at that point. But understanding order flow is just part of the jigsaw puzzle, isn't it? Understanding that this order flow becomes of some value doesn't mean you've got to find an ICE order. A high delta followed by a very high delta followed by a Voltic indicator followed by some book liquidity could equally be a buy trade. Why? Because that's what a POV buyer would look like. So I want to just show you that before we get all upset that there's not that many of those types of trades. There's an incredibly large delta candle just here, isn't there? A very heavy selling coming in this candle. So would you buy that? Of course you wouldn't buy it. It'd be madness to buy that candle. There's book sellers and there's delta sellers. So therefore, there's never going to be a buy trade in that candle in a billion years. You might take profits on it because it's a large down candle into selling. So as an institution, I'll always take profits on that candle. But what happens if the next candle has a Voltic and a big drop off in the deltas and a buy book? Well, the next candle has selling deltas, a buy book, and a Voltic. So in other words, you're starting to say, well, what the hell is that Voltic indicator then? That's either a very aggressive buying algorithm, perhaps refreshing behind that trade just there. Yeah. It's either a very aggressive buy algorithm coming in behind that, or it's a POV algorithm starting to work up the buy side trade, which is why we've seen some pins to the upside on the buy deltas at that stage. So this could also be a very possible reversal trade at that point, couldn't it? Something that you could model and try and take advantage of. Price of 93s. What happens next? The price explodes off that price print all the way up to 97s. It's a crazy good trade, right? And yet it's not that difficult to have modeled that trade by just understanding how algorithms work at some stage or some level. So when you start to see these elements, you're always watching for these things. Look, you're scanning very quickly through your order flow. You're waiting for a very high speed delta. You see a very high speed delta here and you're saying, okay, well, there's a lot of deltas coming in here, not a lot of selling book. And if you were waiting for example, a big Voltic indicator, it never shows up. It doesn't show up, does it? So you say, damn it, that's almost the perfect trade narrative. If you got a Voltic on this one, you'd say that would be the perfect buy narrative, wouldn't it? You never got a Voltic in that one either, so you're missing the pieces that you'd maybe need to lean against that as a perfect buy trade. But because you're starting to see these pieces, what happens? You stop needing to see some of the other bits if other pieces fall into line. So I already can see when I see a huge selling delta that size, I'm going to start casting my eye across the book to see what are they going to do with that seller. Damn it, they're taking the price down, and yet they're taking the book up. That's the last of the sellers coming in. The last of the beacons are now visible. So I think that we could start bidding for these low prints as a local, couldn't we? We could start bidding for the low prints because the sellers have now worked out all their business. So long as I can get 91.5 for a buy trade, I'm probably in pretty good shape, right? Well, I needed 91.5 because it went up to 93s and then came back to 91.5s and then it tested through the level. But that's okay because I wouldn't have lost any money and made maybe 8 ticks profit on as a local. I'd maybe made 8 ticks. And you start watching the order flow for these elements. You can see there's a very high delta coming in there, and you say, wait a second, that high delta came in, but the book actually went bullish against that high delta. Damn it, that's a possible bottom edge. That could be something that's coming in here. There's a lot of sellers that are now trapped on this, possibly. Boom! Another profitable trade comes away from that little bit of knowledge. Do you see how we watched? It doesn't matter what we're looking at, does it? It doesn't matter if we're answering Andy's question about stochastics, if we're answering Andy's question about algorithmic stochastic narratives or relative value narratives, or if we're asking somebody else's question about limit order books or order flow. It's about that knowledge, that all-encompassing knowledge that allows us to make decisions regardless of what it is we're looking at. We're not single-dimensional traders, in other words. I mean, are we? We're not these kind of guys that need to see a stochastic to make a decision. I can see heavy selling on that candle against a buying coming in the book. That shouldn't happen. If it does happen, it means that these sellers could be uninformed. It could also mean that they could be stops. Could we verify whether they could be stops? Yes, we can. Because we can look in the background and we can draw a line against the last low price. So could that selling delta there be stops? Yes or no? Is it highly likely when the book is buying that they are stops? Yes or no? It's not just possible. It's highly probable, isn't it? It's highly probable that that's a stop run and that uninformed seller is actually a stop seller. It's actually a sell stop order that's been triggered at a bottom edge. And because it's not an informed seller, which is visible from the fact that the limit order book is bullish, if I had some other elements, a value line that says this is a really good buy trade, you'd say, well, you know what, I'm just going to start buying this. This is a brilliant trade for me. Because I know how to read a marketplace, right? And sure enough, you just step into the S&P at that price there of around about 90.5, 93.25, and the price rallies up to a high print of 93s. Easy money trade, right? And that's where we are at the moment. Nothing else has happened. There's not a lot of buyers coming in. There's not a lot of sellers coming in. But the worst case scenario is you've got a trade off there with a stop at break even, and you just are waiting to see whether you get any upside to this trade. It's about adding probabilities. It's not about saying, I think this is going to be a ballistically good trade, because order flow doesn't tell you that. What order flow tells you is that the probability is in favor of it being a buy trade at that price. That probability can change to a sell at the next price, but we don't know that until it happens, right? We can't be living our life in hindsight. We can't be looking at this and saying, yeah, I can see that that would have been good. You've got to be able to read it on the right-hand edge. What are you not seeing? I'm not seeing any selling deltas. I'm not seeing any selling order books. I'm not seeing any buying deltas. I'm not seeing any buying order. I can make that read in real time. I can see that there is selling order books here. I can see there's some small selling deltas. So the one thing I know is that I don't want to be buying that trade, right? I don't want to be trading long in that narrative. So if I wanted to, I could work sell orders against this price level here, couldn't I? The book is predominantly selling. You can see the book is predominantly selling in the background. And obviously, if you wanted to do any business at that stage, you could try and work some sells against it if you liked it. If you were long, you'd be closing out your long positions because you know it's going to sell off from there. and it has actually just sold off from there. There's a big delta, a big Voltic coming in on a downtick, but that might be the stop run again, right? That might just be the stop run. So you're obviously waiting to see if you get any buy-side book coming in behind it. And obviously you're getting a buy-side book coming in behind it. That might be a trade that you're attracted to, but there's still a lot of selling on that, so you've got to be careful. So when you see that starting to show up, you can start working some bids into that trade just there, couldn't you? At what price was that? 89s. Well, there you go. It's just traded 90s. It's just made 4 ticks profit on that trade. It's now made 6 ticks profit on that trade there, see it? So you've just seen a real live example of what we've just been talking about. So a lot of people say you can't see this on the right-hand edge of the chart. We've just seen it. There was a lot of selling deltas. We got a Voltic, but that's the stop run. This Voltic tells you that you've definitely got the right trade because that's not a stop run. The book buyer coming in at that stage tells you you've got to be taking action. We talked about it when it was trading at 89s, 89 quarters. It's now trading 91 halves, 91 quarters. That's an 8-tick profit off that bottom edge, guys. And it was seen live in the room, wasn't it? It was seen live in the room. Don't dispute it. Don't try and tell me that that wasn't a live quick call there. We just watched that trade there. We saw the second kick in here. We saw the book buyer coming in, and we said that's now more likely to be a buy trade. And it was around about that 89, 89 quarters when you saw that second trade coming in. It's just traded 92s. That could have been a 12-tick profit for you in that bottom edge. And that's how easy it is to see in real time. But you've got to practice that to get your confidence that you're seeing the right things. Heavy deltas plus Voltic. And then a little change in the book narrative. You've got a trade, right? Heavy deltas plus Voltic. Change in the book narrative. You take advantage of that trade. Because that could be a POV algorithm coming in behind that sell. If it's a POV algorithm coming in behind the sell, the price will go up after that. And that's all you're trying to accomplish, is that change in the probabilities that the price is more likely to go up, at least temporarily, and allow you to get your stops in at break even. And if it breaks north for 1,000, you're in it. If it doesn't, you take 10 ticks out of the trade, you take 5 ticks out of the trade, you take 1 tick out of the trade, pay your commissions, and you move on. Anyway, we were just lucky we got one right there at the time we were talking about it. So let's move on to the actual class that we were going to be talking about, and that is the DAX.